I'm my own bank. You should be too. It's Jay Joseph with J Money Secrets. And who am I? I'm a wealth advocate and expert. I'm an insurance expert. I'm a stock and options trader. And I'm an investor. Let's invest. Let's invest and take some time to talk about being your own bank or investing in somebody else's bank. Now, normally times, 9 times out of 10, a lot of us, we do what? We have our money into a money market, checking, savings, a CD, at a, whether it be a local, regional, or national bank, like Bank of America or Regions. So what? These particular institutions, they actually hold our funds inside of their accounts. Then they hypothecate these funds, where they're going to lend it out to multiple people multiple times, and they're going to make money on our money. Now, what happens is that we're actually paying them an interest rate for the money that we actually borrow from them. Ask yourself, what is the interest actually bringing you? What is the benefit of you paying interest? I'll wait. And this is what we're doing. The largest cost we will have in our lifetime will be that of finance charges. And what does that look like? Paying interest on auto loans, credit cards, personal lines of credit, mortgages, some of us student loans, right? So this is interest that we're paying to a third party institution that majority of the time we have no ownership in and we're getting no benefit from. But what if I told you that you can actually become your own bank and you're paying interest to yourself and or a company that you have part ownership in? Let's talk about it. So now if we have an example, let's say we have $100,000 sitting in a checking or savings account, and the goal of those funds is to obviously use for leverage for investment opportunities or purposes, and also leave behind for the next inheritance, because a good man leaves an inheritance for his children's children. So when that $100,000, if I were to pass today, my inheritance will receive $100,000. Number two, the bank's going to pay me a APY, annual percentage yield, which is going to be pretty low, not even keeping up with this thing that we call inflation. So the bank is, let's say on a savings account, it'll pay me 2%. 2% on $100,000 gives me $2,000 that I made for the year, right? It does, but it doesn't take into consideration the federal ordinary tax bracket I have to pay on that. So therefore, I'm getting less than $2,000. I'm getting less than 2% because I have to pay taxes on the money that I earned, because interest is taxable. Next of which, if the average rate of inflation, which is the increase of the consumer goods that we normally consume, is about 3% every year, I'm only getting 2%. There's a discrepancy there. I'm automatically going to be losing on my purchasing power, which is my future dollars to buy items in the future, because those items are going up at 3%, my money's only going up 2%. Also, money sitting inside your checking or savings account is tied directly to your social. Therefore, it is accessible potentially when it comes to litigation. Creditors can actually come and lawyers can come after those funds because they're sitting inside of your checking or your savings account. So all of these things are what happens when money is sitting in a regular checking or savings account. And then if I pull money out of this checking or savings account, let's say I pull $50,000 out, how much interest is this bank going to pay me on this $50,000 that I just took out? Zero. They're not going to honor or give me any benefit for taking money out of their institution. So this is what happens when my money is sitting in a checking or savings account. Yes, it is FDIC insured, and also it's liquid. I can get access to my money when I want it or when I need it. But let's look on the other side of the spectrum where we all should be, and that is what? Becoming or being our own bank. You may have heard it as infinite banking, velocity banking. It is a thing. Knowing that finance charges are going to be my largest expense over my life, I want to make sure that I reduce that expense, and I'm also paying myself that expense. So therefore, that what increases my net worth, my wealth at a faster and higher rate. Now, when I have money in my own institution, if I took the $100,000 and put it into my own bank, immediately my inheritance, they can literally receive two, three, four, $500,000 if I were to pass today. That's an immediate benefit. Number two, the average rate of return is normally anywhere from like 3.75 to like 5-6%. We're going to use 4% to be conservative. So 4% on this $100,000 gives me now $4,000, 2 times the interest rate that the banks were paying. But the also additional caveat is that money earned inside of it in my own bank is not even taxable. It grows tax deferred. In addition to this, the money set aside in my own bank is normally not subject to litigation. Let's keep on building upon this. So now, if I needed to access money from my own bank, that $50,000 example, I could take out $50,000 from get access to $50,000 from my own bank and still earn the 4% on a full $100,000 balance. This is how my money is working more than one time for me. Because one thing about us, we can work hard, but the problem is our money doesn't work as hard or even not harder than as we're working. And now we get to get our money to work hard for us by earning at least that 4% that grows tax free. But now it gets to work twice for me because that 50,000 I took out, I still earn interest, the crediting interest rate on the full 100,000, and then I can take the other 50,000 and go buy another asset. So now my money yet again is working twice for me. And majority of the times it does not. And then not really being subject to litigation makes it an even more desirable vehicle to have our money in. So what am I saying? We all need to be our own bank. This is how we build this thing called wealth at a faster pace. This is why I actually left corporate America, fired my boss to become my own boss, to where I can create this brand called Jay's Money Secrets that's going to educate you and your family on this thing called financial literacy, on wealth, financial literacy, specifically on wealth, to what? Achieve this thing called financial independence and to live life on your own terms. Banking is one of the fundamental things that we need in order to what? Store our money, grow our money, and then get access to our money when it comes time to finding other investment vehicles and opportunities, and even for emergencies. These things do happen. We always got to plan for the worst and hope for the best. And when it comes to having your money in your own bank, guess what? You have access to those funds. Within a few days, money is ACH to your account just like that. And you normally get access to 80-90% of the money you have in your bank. So being your own bank is ideal, and this is a fundamental strategy that you need in your wealth building plan when it comes to building wealth. So do this. Check the link in my bio. We have a wealth analysis for you to go ahead and go through, and it's going to see how we can work with you to help you build your own bank, because everybody's financial situation is different. So we want to focus and tailor that experience on you. Fill out that questionnaire, which is going to lead to a one-on-one with myself and my team to educate you and show you how you can become your own bank. So now we can get your money working more than one time for you, and also make sure that we're leaving a bigger inheritance when it comes to your the people that you love or the organizations that you believe in. And until then, like, subscribe, and comment below. And do me a favor, let's invest.